Folks, welcome back to the Taylor Tax Show, the podcast that helps highly paid, highly taxed, high profile, high net worth, and ultra high net worth taxpayers save a bunch on taxes perennially and strategically. I'm Terrence Taylor, the co founder of Taylor Tax. I'm an enrolled agent and I have my MBA. This is my partner, Big Al Donnell Jr. Say what's up, Big Al.
Going on, everybody? I'm Big Al, and I love my mama.
And Big Al is also an enrolled agent and also has his MBA. Folks, this
Indeed.
is episode 42, and today we're going to talk to you about a topic that we really didn't want to bring up in polite company, but we got to talk about it, layoffs. So, what do you do if you suspect you're going to be laid off from a highly paid job? This episode is for you. We got 10 tips for you. And Big Al, just to set the context so folks know why we even brought this up, Mark Zuckerberg on January 14th announced in an internal memo at Meta, company I used to work at, that he plans to lay off 5% of his workforce, which is estimated to be around 72,000, the workforce is. So that implies 3,600 people, Big Al, are going to be laid off. And he says February 10th, folks will start understanding whether they've been impacted. Then it turns out that he may have had a conversation with one of his buddies, Bernard and Louis Vuitton, like LVMH, right? This billionaire baller. And so apparently the term that they're using is not layoffs, is being promoted outwards. Let that sink in for a second, folks. Being promoted. So they're promoting you out of a job. That's just crazy. And then Mr. Trump said that when he got into office the second time, he wasn't playing, and he's not playing. So in addition to his Department of Government Efficiency, DOGE, he has announced that up to 2 million people have the opportunity to take a package and they just need to send a word, one word saying resign. So in other words, 2 million government employees are potentially going to be laid off. And then last thing to share, Big Al, we crunched the numbers to see what's been going on. Last year alone, it was estimated that 100 tech employees were laid off. And since 2022, it's estimated that over 216,000 employees have been laid off. So, folks, we got to talk about this because you got to know what to do. And my man Big Al Donnell has 5 tips for you. And then I'm going to hit you with 5 more tips, and then we're gonna wrap this. Big Al, hit it.
All day. Well, yeah. So here's the crazy thing. Well, we want to make sure that you're in the right mind space. It's best to plan for bad situations before the bad situations arise. We just got through talking about having a 14-part series on life insurance, and nobody likes to talk about life insurance, but you definitely want to talk about it before the end of your life. So and that's why we're going over this right now, seeing the writing on the wall with the outward promotion. So anyways, step number one, make sure that you review your severance package. So with the severance package, oftentimes at these larger tech companies, they're going to provide you a certain number of months or some sort of severance package that could look something like 3 to 6 months worth of pay along with another 6 to 12 months worth of benefits and things of that nature. But make sure that you review it and that you know the outline of everything and that you confirm what these amounts are going to be, how it's going to be paid, all in a lump sum or over the next 6 months or in some other form of stock and options and things of that nature before the impact happens, because that gives you time to kind of plan for it and speak with the tax advisor. Number two, max out your tax advantage accounts before being laid off. Tax advantage accounts being qualified accounts oftentimes, such as your 4K, your 403B, HSA, if you do a backdoor Roth, and things of that nature, because some of these things end or you won't be able to access them as easily after you're impacted. All right. But you just want to make sure. And then also, as you'll find out, hopefully you won't, but as many find out, that money really has a million places to go once you're no longer bringing it in, every 2 weeks. So if you don't put it away first, then you're not going to be able to, you might not have it to put away before the end of the year in order to make sure that you save on your taxes. So it's kind of like a forced savings to an extent. Next, number three, we'd say plan for your stock options and RSUs. Once again, a lot of people at Meta, almost everyone at Meta, has a form of their total compensation in stocks or RSUs. So the thing is with these RSUs, they vest over a certain number of years, 1 to 4 years. They're paid at quarterly, and you want to make sure that whatever is owed to you, once again, review your severance package, but whatever is owed to you from a stock or RSU standpoint, that's paid out And of course, but that's depending on the vesting date. So just make sure that you look into that and make sure that you know how to access these RSUs if you no longer have access to your work software, and that if you need to transfer, that you do a broker to broker transfer and you don't put it in your own personal hands, because that might create a taxable event if you move it the wrong way. All right, number four, we would say access your cash flow, assess your cash flow and your emergency fund. I was literally just talking with Terrence about how much do you think someone should have in their emergency fund, and he mentioned whatever you think is most what makes you most comfortable in life, because a 3 to 6 month emergency fund is kind of like a one glove fits all. But we got people with Andre the Giant hands, and we have people with Willow hands, if you know what I'm talking about. So I'm not talking about Willow Smith either, but it was a movie from the 80s, Lion, the Witch, and the Wardrobe. But so make sure that you assess that. And when we're talking about cash flow, we're talking about your net cash flow, what you're going to need to operate on a regular basis. I like to make sure I tell clients to really assess what their fixed expenses versus variable expenses are, and make sure that you can cover those fixed expenses for a fixed amount of time, however long you think it's going to take you to find another job, because the variable expenses can fluctuate. You're probably not going to be spending as much on groceries, eating out, and travel if you're impacted as you are when you have a full-time job. So just make sure that you can cover those fixed expenses pretty easily. Next, and the last one for me is consider a Roth conversion uh, in the low income year. So a lot of times individuals build up their 401ks, over time. And if you've been with a company for 4+ years, you could possibly have $100,000 in your or more in a 401k, because you could contribute maybe like $26,000 to $29,000 over that per year for those 4 years. So now, guess what? If you're impacted in 2025, crazy thing is you know it up front, and not if this isn't like you're finding out in September or October. Then what you could do is that if you're not going to have a job for 3 to 4 months, this is going to be potentially one of your lower income years. So make sure that if you do anything, use this time to do that conversion, because you're going to have to pay taxes on that conversion to a Roth conversion, and you want to pay taxes on a lower tax bracket, which this permits. But yeah, back to you, my man, Terrence.
All right, thank you, Big Al. Folks, five fantastic tips for you. So let me continue. Number six, Big Al, is folks, think about your health insurance options, right? So when you get laid off, Cobra is going to be an option. It's kind of costly, so you might want to see if you have a spouse that has another plan that you can be covered by. Maybe you want to check out plans in the marketplace. So number seven is to delay or minimize your capital gains in a low income year. Why? Because your income isn't going to drop. And if you have a lot of capital gains, you may not be able to reduce the taxes on the capital gains. It's a bit of a catch 22, right? You're going to probably need to sell assets when your income drops, but where you can find a way to do so in a tax advantage way, do so. So time the sale of your assets as best as you can. The next one is a nice one, Big Al. You can actually deduct the cost for job search and relocation expenses should you need to relocate for a new job, or as you spend time looking for a new job. So many states will allow you, some states will allow you, I should say, to deduct these expenses. And unfortunately, as we know, the federal tax code no longer really allows for relocation expense deductions. And there could be ways to be strategic about how you do that to still qualify. So you can reach out to us if you want to discuss ways to do that. Number nine, use tax loss harvesting to offset income. So folks, as we've covered before in this podcast, you can use tax loss harvesting to basically reduce your taxes for up to 300,000 of excess losses to offset your ordinary income. And there's strategies that you can use to offset more than that, but for most people, they can offset 3,000. And then last but not least, start tax and financial planning for a consulting gig or entrepreneurship, freelancing, whatever you might be getting into next. And there are tax benefits to setting up an LLC or an S Corp to help you to unlock tax deductions, such as home office expense deduction, health insurance, business related costs. We've talked about even accountable plans before. So bottom line, folks, is there are 10 things that you can concretely do. but we got two quick bonus tips for you. So number one, you could look at how you should talk to a lawyer to look at, is it possible to negotiate a better severance package, right? So before signing anything, make sure you spend that, I don't know how much it'll cost, like a few hundreds, maybe 1,000 or thereabouts. Spend an hour with a good lawyer who helps you to see what's possible for you, right? Because when you're in high profile jobs, you tend to, in high paying jobs, you tend to have some leeway to negotiate severance pay and maybe extend benefits and stock option vesting. A well-structured severance package can really make a huge difference for you folks. And then the second bonus tip is when Big Al talked about emergency savings, consider putting your emergency savings in a whole life insurance policy, because within a month, there's a product out in the market that allows you to borrow up to 80% of that money when you need it. And it could be a game changer for you because it still work. That money that you borrow will still be working in the policy for you. So folks, that's what we wanted to share with you. If you want to get in touch, if we can help in any way, you want to just discuss some of these tips, you want to figure out how to make this work for you, you can reach out to Big Al at Big Al at taylored.tax.ai, BIGAL at TAYLORED or me, Terrence at taylored.tax.ai, TERRENCE. All right, folks. See you soon.
Cheers.